So welcome again, everyone. My name is Arjun Bhupal. I work at Gatsby Africa, which is a private foundation that works to build stronger and more inclusive economies in East Africa. So recently, Gatsby Africa and British International Investment have conducted a research study to look at how development finance and impact investing on the one hand and donor market shaping initiatives on the other can collaborate more. We believe that there's a lot of value to be had from collaboration and that both sides can benefit, since they both very often are working towards similar objectives in terms of large-scale job creation and driving inclusive and sustainable growth. But they bring very different approaches and tools, which can be very complementary. And there are a number of ways in which we believe that donors can support investors. For example, by providing pipeline opportunities, by buying down risk, by providing firm-level technical assistance, as well as by strengthening the ecosystem within which firms operate, which can improve the long-term success prospects of these firms. So we're lucky today to be joined by the two authors of the study, Irene Hu and Justin Van Ryn. Irene will be our moderator. We also have an exciting panel who will share how their organizations are approaching this agenda of greater collaboration between investing and the donor world. We have Ben Gimson, Gatsby Africa's Aquaculture Director, Tom Sanderson, FCDO's Head of Profession for the PSD Advisory Cadre, and finally, Alex Kucharski, who's the lead for market shaping technical assistance at BII. Irene will lead the discussion with the panel, and then following that, we'll have a Q&A. So please do put in your questions into the chat at any point, and we'll pick them up later. So before I hand over to Irene, I just wanted to spend a couple of minutes sharing a little of what the study found. So we found that there is a lot of activity already amongst donors, investors, and implementers in terms of trying to bring these two worlds together, the worlds of private sector development, donor market shaping work, and the investing world. And we found that broadly, there were three models of alignment. The first was the in-house offer, where organizations build the capabilities of the other side within their own organizations. So for example, BII, British International Investment, working to move beyond just firm-level technical assistance to providing market-shaping technical assistance. And on the other side, you have organizations like Gatsby Africa and Financial Sector Deepening Africa, who have in-house investing capabilities alongside their normal market shaping activities. The second model we saw was more structured coordination, where investors and donor implementers are part of a more formal engagement. So for example, the Dutch Fund for Climate and Development consists of a consortium of funders and implementers, which includes the Dutch Development Finance Institution, FMO, implementing agency, SNV, as well as WWF and climate fund managers. And finally, the model that was most common was the ad hoc engagement model, where you had donor initiatives and investors coming together more opportunistically to identify and facilitate deals. So for example, USAID's INVEST program and FCDO's Manufacturing Africa program. What the study found, the study didn't recommend a best practice model. We think each of them obviously has their own advantages, disadvantages, and are appropriate depending on the needs of the organization and the specific context. And of course, organizations can implement more than one of these models. Finally, I'll just touch a little bit on the sort of the ways that organizations are engaging. We find, and not surprisingly, that it's quite challenging for investors and donor programs to work together. We found there are a number of success factors and challenges, which we grouped under three broad themes. Firstly, the incentives and strategic focus of the organizations on either side. Secondly, the knowledge and perceptions of what the other side could bring to the table and how easy it might be to work with them, and having the internal capacity to really collaborate and work with the other. And then finally, the specific models and tools and products that each side brought to the table, and the extent to which they were compatible or not. So our report looked at a number of recommendations for how organizations could strengthen that alignment and work more closely together. I won't go into the recommendations in detail. We can pick some of that discussion up in the Q&A, and the report has the recommendations, and we'll share the report with this group next week. But just to maybe mention a few of the recommendations, there were a few sort of quick wins that we found, which is, for example, organizations on both sides having sort of very basic 101 training so that people on the PST side could understand the investment world a little better, and vice versa. Also, I think there's an opportunity for donors and investors to work together to design and set up structure funds that can invest in early stage riskier investments in thin markets, for example. So before I hand over to Irene to lead us through the panel, I might just launch a quick poll just to get a sense of the profile of the audience, which I think it would be really interesting for us to know. So this should only take 20 seconds. So please, everyone, if you can see the poll, it would be great if you could tick the one that describes you, your organization, and your role the best. Okay, great. So I'll share the results so we can look at the results together. Yep. So based on the poll, it seems like we have what 40% who consultancies or think tanks. We have a few independent consultants. We have some investors, some donors, foundations, a couple of implementing agencies, and a few others. So that's great. We have an interesting mix. So I think it should be a really interesting discussion today. So for now, Irene, let me hand over to you to lead us through the panel discussion.
Great. Thank you very much, Arjun. And welcome again, everyone. It's very exciting to be able to have this conversation with everyone, and especially our panelists today. I've spent the last 7 years, mostly based in Nairobi, working with investors and companies and donors. And my co-author, Justin, has spent many years as well from the market systems side. And we've both seen how challenging it is to bring development finance and private sector development programs together in a collaborative way. So I'm excited to dig into some practical examples and experience from our panelists today, much in the same way that for the study, we tried to anchor it in actual case examples and real world experience. So I'll start by asking our panelists to say a little bit more about themselves and the work that they do, and also why they think it's important to try to catalyze more collaboration and alignment between development finance, impact investors, and private sector development. So let's do this in alphabetical order. So Alex, I'm going to put you in the hot seat.
Great, thank you so much. Hi, everyone. It's a pleasure to be here. My name is Alex Kucharski. I work for BII+, so British International Investment, in the technical assistance team. So we were formerly known as CDC Group, and we are the British Development Finance Institution. So prior to joining BII, I used to work on the other side. So I used to work on donor-funded private sector development programs. And the dream was always to attract investment to the companies that you'd support. So I think now, having spent 3 years at BII, I really see how big the gap is between the two worlds, where DFIs on one hand want to invest more, want to go into more nascent sectors and more nascent markets, and need to do a lot of heavy lifting. On the other hand, the donor programs that do a lot of heavy lifting want to kind of attract investment, but for some reason that collaboration is not happening. So for me, it's really the genesis of why we commissioned this report, and why we're kind of looking into this topic, and I'll speak a little bit later about some of the initiatives BII is doing in that space to bridge that gap as well.
Thank you, Alex. Ben, over to you.
Yeah, hi everyone. So my name's Ben Gimson. I'm a program director at Gatsby. In my role, I lead our aquaculture program, which is focused on 4 countries in East Africa. And I guess if we think back to Arjun's 3 models, we're very much the in-house approach, where we're an economic development program with a market systems methodology and approach, where a lot of the work we do is grants to firms, technical assistance, we work on policy. A lot of that is focused on the enabling environment of a sector, but we do also use a range of investment tools. So we have got a couple of large, or at least for us, larger investments, 1.5 to 2.5 million USD. We've got a much more significant portfolio of smaller investments. All of those are less than 100,000. We've experimented a little bit with guarantee facilities, and we're also looking to explore in the future investment into funds. So we try to do it all under one roof. And certainly that experience has led me to be extremely optimistic about the potential synergies between investment and private sector development programs on a number of fronts. It's not always easy or comfortable, and I'll talk a little bit more about some of those challenges. But I think when you get it right, it really can spark sector development. So yeah, really looking forward to the discussion.
Great, thanks, Ben. And last but not least, Tom.
Hi everyone, I'm Tom Sanderson, and I'm the head of profession for private sector advisors at FCDO here in London, although I'm at home, so sorry for my background. It's a great pleasure to be part of this Skoll forum, and the events that the forum run are really fascinating, and delighted to be part of it. So FCDO has a network of private sector advisors across developing countries, about 80 to 85 people. And we're responsible for leading FCDO's private sector development programs. So we're basically on the TA side of the spectrum, but because the UK government owns BII, we're also at the transactional end, at least overseeing Alex and your team's work. So we have quite an interesting perspective on transactions and also on transformation. And what we're trying to do is to do transformational transactions at scale, and to encourage more of that to happen without government, I guess, interference, really, so that the private sector can do it on its own. So really keen to share a bit more of our work later. Thanks, Irene.
Great, thank you, Tom. You might get a chance to share sooner rather than later. I wanted to direct the first question to you. I think you used a really interesting term just now, transformational transactions. And I think one of the challenges in our conversations with investors versus private sector development programs is that the programs focus on really sector level transformation, and investors are more concerned with transaction level success and investment returns. So as part of a large donor that has responsibilities for transformational impact, how do you reconcile the two, and how do you try to engage investors to help with transformational transactions?
Yeah, great. So I think in the last 10 years, I mean, people who are on the line will know this, you know, the impact space, the importance of ESG, the importance of climate in particular, the profit with purpose sort of movement. So those people who are doing transactions are already shifting towards the kind of transformational end, which is great. So I guess it's not like we're pushing water up a hill. I mean, I think the water's sort of flowing down a hill, in the right direction, which is great. I guess what we're trying to do is remove blockages and boulders in the way. So that might be regulatory work, might be around risk or risk perception, and also with BII, who, as Alex said, used to be CDC. So forgive me if I get them hesitate over the name. To use BII and to hold up BII as a demonstrator, as a role model, who can work, at scale with private sector partners and indeed themselves in the private sector, fully commercial, but with concessionary sort of buckets of capital as well, to kind of show the way and to show that I guess this mantra, profit with purpose, can work. So I guess that's the principle. The challenge is at the grassroots. When it comes to individual transactions, it's complicated. There are wrinkles. Every transaction is different, and there's a lot of heavy lifting. So to apply, to try to do this stuff at scale is actually quite difficult, because every individual transaction probably hits different rocks in the stream. So I guess that keeps us busy for years to come. Over.
Thanks for that. Before I direct any questions to the other panelists, I just wanted to follow up on something, Tom. How do you approach catalyzing or enabling transactions when, as you said, every transaction has different stumbling blocks to be gotten through? How do you design a strategy to engage investors and to successfully facilitate transactions when it is, as you said, challenging to do so?
I think to answer that, what Arjun mentioned, the Manufacturing Africa program at the top of the meeting. It's a TA program focused on the manufacturing sector. We have chosen to focus on 4 or 5 different countries across Africa. So we have people in those countries who are working with the ministries of finance, ministries of trade, helping set up special enterprise zones and so on. So you need to be close to the ground, as any good transaction is obviously close to the ground. You can't kind of do it from London. So knowing your market, knowing the institutions, trying to strengthen those institutions, trying to increase transparency, predictability. So that's the kind of approach that a program like Manufacturing Africa has taken, and indeed some of our other programs. So that's one aspect. That's sort of one approach that's kind of on the TA side. And then the other side, alongside BII, CDC, we have special purpose vehicles where we have put our money where our mouth is, and we've been able to provide some catalytic capital or concessionary capital, or take positions in investment structures that can bring comfort to other investors and then kind of make it happen. So there are we've got a kind of portfolio of approaches, all intended to demonstrate and to ease this market and unblock the market and increase the flow of capital.
Great, thanks, Tom. Alex, I think BII is a great example of the trend Tom was mentioning earlier of DFIs and investors thinking more and more from a market systems or a transformational perspective. I'm going to be a bit provocative and repeat what I heard this week as I was speaking to potential or companies out here in East Africa who said, CDC back then at one point couldn't be really distinguished from a rather aggressive private equity or hedge fund debt investor. And I think over time that started to change. So from your position sitting in a TA, market systems TA function within BII as an investor, could you speak more about your approach to bridging the gap between private sector development thinking and investor thinking in a productive way?
Yeah, thanks, Irene. I think there's quite a few things to unpack in your question. One is, whether we as British International Investment have market shaping as an objective of our investment strategy, and that's definitely the case. And we've just launched our new strategy covering the period of 2022 to 2026, and as part of that, we have quite a sophisticated impact score where various things are taken into account, and there is a pillar there which really examines the impact of transactions on catalyzing markets, as we call it. So that's really, part of the investment strategy, and it's part of the incentives for investment teams as well. So that's one thing. I think the other thing is that we recognize that sometimes capital is perhaps not enough to drive that impact that we need, and especially on the catalyzing market side. So that's why we're kind of venturing more and more into providing technical assistance at the market level to kind of help broaden the impact of our investment strategies. We also provide technical assistance to specific investees, and we're looking to kind of how we partner with donor-funded programs as well. So on one hand, we're kind of expanding that in-house offer and the in-house toolkit with those three models, and we're also a bit more kind of conscious about how we partner and how that works, because speaking to various investment colleagues, I think a lot of collaboration does happen. It's just there's no blueprint for collaboration. I think in this field, I know some investment colleagues sit on boards of development programs. Sometimes donor programs come with investable opportunities to us. And reversely, sometimes we look at a deal, like I was recently in Sierra Leone, and we saw an opportunity, but it needed a bit of help. It needed a bit of heavy lifting where a donor program on the ground could be really helpful. So we're experimenting, we're moving in different directions with the objective of kind of trying to unlock more impactful deals that can also have a catalyzing market or market shaping impact.
Great, thanks. I think you said something very interesting, and a challenge we found as well in our research is that there is no existing blueprint for collaboration, and often no really resources or infrastructure dedicated to it. So as you're trying to increase collaboration within your own organization, can you talk about some of what's worked and what hasn't worked as well?
Yeah, and I think this is also kind of part of the recommendations of our report that links to it. But kind of it's from personal experience where, for example, in a particular country, donor programs focus on sector X, Y, and Z, whereas investors focus on sectors A, B, and C, and maybe X as well. So even in that kind of sector selection of where investors invest versus where donors support, there's a kind of disparity there, which is kind of one thing that doesn't quite work. I think the other thing that is a bit of a hindrance as well is that sometimes the two worlds really don't understand each other. So I was recently on a trip in East Africa, and we were trying to kind of explain, meeting with donor programs and explain kind of the DFI priorities. And I think I could sense that there was a huge information gap between the two worlds, where I think donors sometimes assume that, we'll create a business plan and then an investor will just come if it's a good business plan and invest. And, the reality is kind of very different. And reversely, DFIs also don't know what market systems means, what private sector development means, and which can be a missed opportunity as well in terms of kind of getting support to get transactions over the line, or support in addressing some of the more systemic barriers to investment as well. So yeah, I think that there's quite a lot of examples, but kind of those two really struck to my mind in the last few weeks of having finally done a couple of trips to the markets where we invest.
Great, thanks, Alex. Ben, I'm interested because now that we've heard from BII and FCDO, you've actually done both within the same organization. So a lot of the sector transformational work, the enabling environment, but also direct financing and engaging impact investors to co-invest. So would be super interested in hearing your perspective on what have been the challenges of trying to do both, and what have been the things that you think has made you successful in doing both and in being able to eventually engage investors.
Yeah, thanks. I think maybe the first thing to say is that they are two very different activities, the sort of market supporting or shaping and market systems development and investment. But for us, it's still part of a cohesive set of objectives of achieving systemic change in a sector. And that's really what drives it for us. We do think that that systemic change and the use of investment as a tool towards that systemic change is really dwarfs what sometimes gets focused on as a sort of measurement of impact, which is the more kind of direct sort of jobs created, incomes created within a business. That systemic impact is much more significant, and so it's really great to hear Alex and BII sort of focusing on that kind of catalyzing markets role, which I think is really important. But of course, it does come with challenges, yeah, I mean, it's very clear when you're working from a program perspective, a private sector development program perspective that's trying to support an industry, a sector, or whatever it may be. Your role there is to be supportive of the stakeholders in the industry. Your role, and that's also kind of your license to operate. You need to get buy-in from the stakeholders in the industry. They need to like you up to at least a certain extent. But then when you're making investments, there is a commercial aspect to that necessarily, and there's a commercial negotiation, and there's a threat of perhaps slightly less supportive action if things don't go down a positive track, and so on and so on. And that can become extremely uncomfortable at certain points, and there can be reputational issues for a program, and so on and so on. So I would sort of characterize that as the sort of positioning tightrope that you have to walk when you're doing both of these things. And we found that it is possible. It takes quite a lot of thought and management. It takes a certain view on the commercial aspects of the sector, and it takes a certain view on achieving that buy-in, and quite a lot of work to maintain that buy-in. But it is certainly possible. It doesn't always go perfectly, and I think that's something that one has to accept as well. Investment expertise, when coming from a private sector development program perspective, is also something that sort of people naturally tend to think is a problem. I mean, of course, we can always do a better job and be better, but I don't think we've found that a really key issue for us. Investment expertise is we can recruit that in, we can contract that in different ways. Some of our team have experience doing investments, but also straddling the world of programs. So I hear that reference quite a lot as a problem, but from my perspective, that's a reasonably easy one to solve. It's the positioning issues which are a bit more difficult.
Great. Wanted to follow up on that. So one of the other things I've heard, and maybe this is interesting from your experience of having objectives of mobilizing, of thinking about a program or a sector focus through a commercial lens as well as an impact lens, is one of the mismatches we heard is that investors look at sectors and look at businesses and think about commercial return and commercial growth potential, whereas programs think about sectors and businesses in terms of impact for the poorest of the poor or other objectives, and they often miss each other on that. So I was wondering at Gatsby how you think about which sectors to work in, how to select which companies or enterprises to support.
Yeah, I suppose my own perspective, and I think the perspective we have at Gatsby, is one where we don't see those two things in conflict whatsoever. You absolutely need the commercial dynamics of a sector to be working. You need investors to be getting a good return on investment. You need viable businesses. You need investment in those businesses. You need the commercial basics of a sector to be working well to achieve any kind of impact whatsoever. That is just a fundamental reality of economic development, in my view. So it may well be a different starting point, perhaps a different mindset, perhaps a different culture sometimes, and that's perhaps the gap that needs to be bridged. But underneath it all, it's all pulling in the same direction, I think.
Great, thank you, Ben. I think we wanted to leave some time for more open discussion with the audience, but before we do that, Arjun, would we like to ask the audience another poll to see how they're reacting to what they've heard so far?
Yeah, sure, sounds good. Irene, let me put up 1 second.
Sure, and everyone, please feel free to put questions into the chat box as well as we go, and we can address them after this. So we've heard from our panelists about their views on the importance of collaboration and their experience with it. So I wanted to now ask all of you, after hearing that and from your own personal experience, do you think the two sides should actually align and collaborate? Okay, wow, so far looks like everyone thinks it's very important. I think that's we had a good reason for spending all our time writing the study then on how to bring the two sides closer together. Wonderful. Well, we did have some.
Let me just share the results with everyone, Irene. I think that should pop up now for everyone.
Great. Yep. I forgot I have a privileged view as a host, so I got to see the results as they were coming in. But now everyone sees that there's pretty much universal alignment that this is a very important topic. So I think then the next big question is, it sounds like it's a big and important topic, but also a challenging one, whether you choose to do it in-house or whether you choose to have functions within a donor organization or within an investor to try to engage, quote unquote, the other side. And part of the focus of our study was also to think about, well, based on our experiences and the challenges and success factors so far, how can we try to encourage more of the collaboration that everyone agrees makes sense, but that isn't actually happening as much as it should in reality. So Arjun, perhaps it's helpful if we try to talk through some of our specific recommendations from the study and some of the quick wins. And then we can take any questions or see if anyone has any reactions to whether they think these will work or not.
Yeah, sounds good. Irene, let me put that up. But meanwhile, if anyone in the audience has a comment or a question, please feel free to put your hand up, unmute and ask the panel, or just share a perspective on what you've heard.
Irene, can I just jump in? It's Tom here. I just want to pick a bone with Ben, who said, if I got it right, said something like, it's fine, we're all pulling in the same direction. Maybe I said the same. We're all pulling in the same direction, the PSD programming and the, as it were, the investor or the more commercial end. I think in my experience, there's an ongoing tension. And I'll give you 3 examples. For investors in housing, you can probably make more money on high-end housing than low-cost affordable housing. And so a public institution like FCDO will want to push our private partners like BII to do maybe housing for university students or housing for nurses, because we think that has more impact. When it comes to investing in education, the same. You can probably make more money at the top end, higher education and private education, whereas perhaps the benefits to society are more at the basic education, nursery and primary levels. So there's a tension there. And then MFIs that I've seen for myself is microfinance is most of the impact, I guess, is at the lower end of the spectrum. And yet the temptation for investors is to invest larger sums of money into perhaps more middle class clients where the risks are lower. So I think everywhere you look, there are tensions between commercial drivers and impact drivers. And I guess just being transparent about that, trying to map out where the sweet spot is, I think, is a key sort of task for all of us to kind of get straight. And I guess that's why BII's new impact, what do you call it, a framework or a
impact score
scoring system, yeah, is a useful tool.
Yeah, I fully agree with that, Tom. Yeah, I mean, there's clearly a trade-off in certain circumstances between returns and impact, and I guess, I mean, maybe we get a bit off topic for this one, but I guess that then gets into the, what is the role of subsidy for different sectors of the economy or parts of society, and yeah, for sure, some of the sectors that you were mentioning are sort of traditionally ones that do receive ongoing subsidy across the world. So. But yeah, I fully agree that in certain circumstances there is that trade-off. Yeah.
I think related to that point, I see a related question in the chat from Ben Taylor that refers to a tension between if his players are supporting market transformation through some subsidies or softer capital to jumpstart sectors or new ventures, then how can they guard against distorting financial markets? So from that, I take it to mean, are you crowding out private finance? Is it creating strange incentives for private financial markets, et cetera? So I'll throw it open to the panelists and see who wants to tackle that thorny question. No one's jumping in. All right, I'll have to volunteer someone.
I'll jump in first, but it's a great question, Ben. Thank you. And as a taxpayer-funded government donor, it's really important that we don't distort the economy, and that, or if we do it in a good way, and that our funding is additional and doesn't crowd out what might have been there anyway. And I guess I characterize some of our FCDO funded programs. If you were very critical, you might say sometimes we don't do enough technical assistance and other times we do too much. And I'll give you two examples. One was a CTC program, an investment in DRC Congo, which was a really tough investment that they were doing from a commercial perspective, but really it probably needed some technical assistance from FCDO to kind of make it happen. And so in that sense, for that one, there just wasn't enough technical assistance. And then there's another FCDO program, perhaps I won't name the names, where we're doing quite a lot of technical assistance. And when you ask the companies, are you going to carry on this activity once the funding's run out? They say, no, why would we ever do that? We're not going to carry it on. We're just going to do it while we get the free money from the government. And, that's a great example of probably too much technical assistance is not sustainable. So this is perhaps another tension in this area of just getting it right and not overdoing it.
Yeah, and maybe I can just jump in on this one as well for Ben's question. Again, yeah, a really good question. This question of additionality and making sure we're not distorting, certainly not distorting the financial markets when we invest is quite a hot topic for us. We do try very hard only to make direct investments in companies when others very clearly aren't going to provide that investment. And often we find that's because the types of companies that we feel are going to provide systemic impact are, for whatever reason, quite high risk. They may be pioneering a new technology, bringing a new business model. It may be in a very early stage industry, etc., etc. So that's really where we then see a role for us, but we need to do that very carefully and almost only as a kind of last resort. We would often, in those cases, we would much prefer to be providing catalytic support to financial intermediaries or other investors whose main business model it is to be investors, to help them provide that investment. But sometimes, just to be pragmatic, achieving that type of systemic change in financial markets could take many years, and we don't want to hang around for that long. Having said that, we do also try to make those investments in a way that brings in as many of those other investors into that business or whatever vehicle we might be investing into. So actually we're being as supportive as possible of the development of financial markets rather than competitive.
Great, thanks Ben and Tom. I see in the chat there's another question from Maria Claudia Santos. Considered working with the European Venture Philanthropy Alliance, where collaboration is working. So I'm sorry to put you on the spot, Maria Claudia, but I wondered if you could tell us a bit more about how EVPA is collaborating with private sector development programs and its sister networks in Asia and Latin America, if you know about them as well. Give you a moment to unmute or put into the chat if you'd rather not address everyone, and we can move on. I can direct that question towards the panelists instead. Okay, seems like
Irene, it's interesting. Maria's question is sort of similar to Gwen's one about risk sharing and collaborative investing, and I guess a characteristic of venture capital, venture philanthropy is a high risk appetite. And it's interesting in government using taxpayer money. There are kind of two schools of thought. One school of thought is, hey, this is taxpayer money. We have low risk. We don't want to waste it. We have to be really careful how we use this money because we've got to account for it to our taxpayer constituency. That's one school. The other school is, hey, this is taxpayer money from the public sector. We're free to take risks in order to mobilize private actors, as long as we're being additional. That mobilization prize is a big prize. So let's take the risk. Let's take first losses. Let's use our position. It's an interesting difference of opinion that's quite lively debated at times, and maybe that gets to the heart of some of these questions.
Yeah, to the question around these organizations of impact investors, and there are quite a few, and I was wondering if those networks are networks that Ben, you've tried to work with or collaborate with, and if you did, how did that go?
Yeah, I've not had too much or any involvement with the European Venture Philanthropy Alliance, but I think there's a similar organization in East Africa which we have had some engagement with. I mean, to be totally honest, our engagement is on a very sort of focused per sector basis. So often some of these sort of broader sector agnostic platforms are a little bit too broad to be useful for a more sector specific program, but we certainly have had some engagement with the I think possibly the sister platform in East Africa.
Could you say more about what that engagement was like and why, if it went anywhere, or why it didn't proceed?
Yeah, I mean, to be totally honest, aquaculture in East Africa is a very early stage industry. And part of how we see our role is building helping to build a sector where there is a pipeline of investable businesses that investors are interested in. At the moment in East Africa, that certainly wasn't the case 5 years ago. Now we are starting to see a pipeline of healthy businesses that investors are interested in, but it's still a small industry, growing fast, but a small industry. And so as an industry, it probably doesn't quite hit the radar of the East African Venture Philanthropy Alliance. So we're probably just a little bit too small to kind of hit the radar there.
And I think ticket size is also a bit of an issue where a lot of private sector development programs work with businesses, and then those businesses look for investment, but the ticket size is relatively small. And so, you know, perhaps it's not appropriate for development finance institutions or other impact investors, and more appropriate for kind of local bank lending or something like that. But we see that across the board. I think I wanted to also give one example where in Uganda there was there's a chapter of the East Africa Venture Capital and Private Equity and Venture Capital Association, and they just signed an MOU agreement with a EU-funded program that's meant to provide technical assistance to get businesses over the line. It will be really interesting to see how that collaboration plays out, and you know that there's the EU program, there's another USAID program that's also trying to provide kind of investment advisory and transaction intermediation support to businesses. It will be really interesting to see, because it's donors kind of moving from taking a more systemic approach to particular sectors to kind of just asking, you know, we want 50 deals facilitated, for example, and you know, here's funding towards that. But I'd love to also understand if people know of examples where that collaboration has worked well, where an investor has benefited from support from a private sector development program, where a private sector development program was able to attract capital towards its businesses. If anyone has those examples, we'd love to hear about them, because we did try to shake the tree, and the examples are kind of few and far between.
I see that Cecilia has helpfully put a link into the chat of a USAID briefing paper on synergies. Again, sorry to put you on the spot, but Cecilia, do you have any examples of where that's worked well, perhaps from the USAID briefing that you can share?
So I'm former USAID staff, and I was just putting in the chat a couple of folks who are still at the agency for Alex to reach out to. I was on the private sector engagement team when I was at USAID, which looks at collaborations with the private sector. And what's interesting about this briefer that just came out last year is, at least from my experience at the agency, they hadn't really looked at the synergies between a growing emphasis at USAID on collaborating directly with the private sector and what the market systems development or the private sector development activities we're doing. So it's a new perspective. I think it's in a short, pretty interesting. But Alex, I'll put in the chat, and for everyone really, a couple of folks who are still at the agency who can talk about some specific recent examples. I will say there are two major vehicles. I'll also put this in the chat, meaning there are contracts that have been let to implementers that are specifically focused on attracting investment capital. One is called INVEST, that's an acronym, because government loves acronyms, and the other is called Catalyze, and I'll put those both in the chat. But they should have multiple examples. In fact, the INVEST program has annual reports that they publish online of how they've attracted private capital. Over.
Thanks, Cecilia. I wonder if I can put someone else, a former colleague of mine, on the spot briefly. I know on the topic of these USA programs that are trying to bridge the gap between investors and market system programs. Open Capital Advisors has done a fair amount of work here, and I see Annie Roberts is one of the participants. So no pressure, Annie, but if you could talk about the challenges in participating in some of these USAID programs and in trying to do that work?
Yeah, I'm happy to share a little bit. And I mean, we've obviously been very supported by USAID and many of the other folks on this call, and looking at BII, formerly CDC, and obviously Gatsby. We've worked closely together, so really appreciate all the opportunities that we've had for partnership. And I think part of my interest in joining today was really to hear about where those partnerships best practices are coming from. Because I think from our perspective, there really is this incredible opportunity for these partnerships and collaboration, but it also can be difficult when there are different perspectives on what the priorities are, perhaps for the private sector partner as compared to the development partner. And I think in particular, the development partners want to focus exclusively on the impact, which absolutely makes sense given their priorities, the fact that they are often shepherding public money. But at the same time, when trying to partner with the private sector, you can't only look at that aspect of it. And I think that, trying to help translate between those two is what is really critical for some of this collaboration between some of the development partners and some of the private sector partners. And without the ability to kind of help speak each other's language, you oftentimes find that these partnerships can be talking past each other, which is obviously not what anyone wants, but I think is a key aspect of collaboration, is making sure that you've got people that understand what both sides are looking for and how to make sure that they can frame it in a way that partners on the other side will understand.
Thanks, Annie. Alex, I wanted to direct a question to you, because now BII with BII Plus has basically two teams of people. On one side, there are people with a market systems or private sector development background like yours, and on the other side, you've got really investment-centric deal teams who are really focused at, with the impact scorecard on finding good deals, getting them done, seeing a good return for BII. So even within the same organization, how do you bridge these two different worlds, backgrounds, languages, et cetera?
That's a really good question. I think, I sometimes see that disconnect between, even the different teams, which speaks to the kind of need to bridge the gap. But I think, from where we're sitting, I think we're really conscious that, we are not a standalone team. We don't have a different impact objective. Our aim is to work with investment teams, to help enable the impact of our investments. So, with that in mind, a big learning curve for anyone that joins is to try to speak the same language as investment colleagues, try to understand the incentives, try to understand how investments work. And we have some training for non-investment professionals to understand details of various investment instruments. So, so I think it's really important, and it's something that we're conscious of. And I think it's really interesting where some DFIs, like for example IFC, they've created this huge new function called IFC Upstream, which draws, in my view, on both private sector development and on investment. And if you look at the profiles of people working there, it's actually either ex-bankers or ex-PSD professionals or ex-investors. So it speaks to the need of mixing the two worlds up, in my view, and that's the kind of holy grail of collaboration, where you can create kind of cross-functional teams and organizations that use different tools to achieve the objective, the ultimate impact objectives.
Great, thanks, Alex. I think we're fast running out of time. So before I hand it over to Arjun to close, I also wanted to put it out there that our study will be released soon. And in addition to putting some recommendations that we feel are key to enabling more of this cross-functional collaboration, sharing the same language, trying to reconcile differences in priorities, et cetera, we're also looking for people and organizations that are eager to collaborate on pilots, to host pilots of some of our recommendations within their own organizations. So please do put into the chat your contact information, or feel free to reach out if you are interested or your organization would be interested. So I'll hand over to Arjun to do a quick wrap up.
Yeah, sure. Thank you, Irene. I think we're almost out of time, but just wanted to say a huge thank you to the panelists, to you, Irene, as well, and to the audience for participating. I think what we've heard today shows that there's, I think, a lot of interest, a huge potential for this, but it's challenging the modalities and incentives aren't always aligned. The language, terminology, skill sets. So I think there's a huge body of work that can be done over the next few years. So that's something I'm really excited about. As I won't keep people much longer, I just wanted to say, as Irene mentioned, we'll share the report with you next week. And if you want to continue this conversation, please reach out to Gatsby, BII, and FCDO. I think we're all really keen to continue the conversation and are really excited by this agenda. So maybe I'll just wrap up there. Thank you, everyone. And hope you all have